Good morning, everyone, and welcome to GPA Trading Services live trading class on this Tuesday, September the 23rd, 2025. As you know, today is Tuesday, Gary's Market Forecast, or GMF. It's the heads up on what's going down in the markets. But first, we have very specific rules of engagement. Those include the following: do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4-hour, the 1-hour, the 30, and the 15-minute time frames align prior to trading with the MPA PE5 version 5.0 software. Also adhere to very strict money management rules, which includes never risking more than 2% of your entire account balance on any one given trade. For options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services is for your educational purposes. So please give us a moment as we open up the charts. All right, ladies and gentlemen, picking up with the dollar index on the monthly chart. Quick overview: wave one is done. We're working on this wave two down. Is this the new low and that's it, and we start breaking out? Or are we going to make yet another low and continue this grind lower? We're getting closer and closer toward the COVID low, and we're about to break below that 786 zone. So once we do that, then it kind of sets the tone. We'll probably go even lower toward that 85, 82. So at some point, just remember, this wave two will end, and we're supposed to go breaking to new highs. Is it here? Is it somewhere between where this is being reflected here, our long-term destination down here we talked about over 3 years ago? Somewhere between here and here, that wave two should end, and we should go breaking out. So that's always been the plan: a retracement followed by a breakout. So just keep that in the back of your mind. Now, do I think this is over at this new swing point low? Not yet. No reason to believe that is the case. Go over here to the charting platform, and we can see that this dollar index came down, made a new swing point low we called for. That was fine, but it's not quite to the targets we originally discussed, this 95.80 area or this 95.40. Where did that come from? That prior swing point low up to the current swing point high. We got our beautiful retracement. We broke the 618,786 on this one, but we didn't get quite down to our targets. So this trend line is extremely important for the time being. Why? We keep getting a lower highs, and that's what I call my lower high trend line. And even as we rallied last week into this line, I said, be careful. I don't see this as a breakout. If we're going to break out, A, we have to break the trend line. B, we got to break this area up here where we tested multiple times. It's a battle zone coming across from that area. So we'd have to break the trend line, the prior section of highs here, then we go up toward the Magic Fibo. We got to break that, etc. So as long as we hold this trend line, the bias is, one more time, we're likely going to break lower, make another swing point low, and start to focus on this 95.80, 95.40 area. Because again, the rule is from the low to that high, when we took out the 618, which was this candle over here, the body closed just below that 618 level. And when it did that, see that 97.80, when it did that, mentioned we had a 75% chance we're going to go down there. We dipped close to it, but no cigar. Was that close enough? Maybe. Maybe that is the end, because theoretically, all you got to do is get a new swing point low, and this thing could possibly reverse. But up until price proves its intentions, got to break the trend line, Got to break this swing point up here where we tested multiple times, test, and we're still getting lower highs. So A, B, then we got this area up here, C, then we still got to go a ways before we say, well, that looks like it's the end. Last time we saw something like this, we discussed it in great detail. We rallied, we got a pullback, and then we went up in this wave. Either was a 1, 2, 3 or an A, B, C. And we went through the discussion of what's the difference if it's an A, B, C versus a 1, 2, 3, potentially going 4, 5 and continuing. That would be a bottom reversal. If you're going to bottom and reverse, you typically don't get a 3-wave correction. It works into a 5-wave followed by a 3-wave correction off of that, then another move higher. That kind of sets the tone, the bottom's in place. Well, this one, we discussed it in great detail. We drew this big pink box up here, and we said if this is the AB and this rally up in C stops anywhere in this pink box, then we revert back to a downtrend and we close below a 618. It's over. We're going to make a new swing point low. We did that exactly, right? So is this the new low and this is the beginning of a break? Well, price action has to speak loudly. We have to break this level. We haven't done it. That doesn't mean it can't possibly happen, but we rallied right into that trend line, failed, and we pulled back. Could we rip up and higher? Well, breaking the trend line's a start. Then we break this swing point up here. That's another one, and this. So until I see this in a beautiful 5-wave, 3-wave correction, and a blast off, until I start breaking above the Magic Fibo on this daily chart, you see the D behind here for the daily chart, then there's no way we're breaking up higher at the moment, right? So price has to prove it. Trend line first, swing point, followed by Magic Fibo, then we might start to say, well, maybe. And then it has to look right. We have to get a 5-wave correction, 3-wave back down, and then a continuation. But as long as it's below this Magic Fibo, not going to happen. As long as it's below this trend line, which is way below the Magic Fibo, not going to happen. So the bias is we still have that 75% chance this thing will grind lower heading toward those targets. Well, once we start pushing to a new low, this kind of greenish, aqua-ish, I don't know what the official color is, but that line right below my green line is very important. That comes from the bigger move, which is this COVID low up to the high. We broke the 618, which we're grinding lower. So that right there, basic in this area, that's kind of leaning us toward this 85, 82 level. If we can take out the 786, which is obviously lower than we are, this 97, it's down here in that 94 area. But if we continue to make lower lows and ultimately close below this 94 area, then it sets reiteration of A, we should go 75%, we should come down to 85, 60 area. And B, about a 70% chance we'd come to this 82 area, which again, why are these important? Because it's awfully close to what we diagnosed as a potential target over 3 years ago. So if this holds, we could reverse and go breaking out, sure. If it breaks down, then we could come down toward our target zone down in this area and then reverse. But the plan was never for this top reversal to make new lows below what? You have to go out to the weekly chart. That's just the COVID low. But this originated from this low down here back in 2008, 2007, 2008, early 2008. And that's that 70.99 on this chart, 70.53 on that MetaTrader chart. Doesn't matter what chart you're using, just find the swing point low in the 70s. And that's the one we believe we were going to get a deeper retracement from. That's where that 618 786 retracement zone comes in. So I was looking for a deep retracement, at least a 618. That's around 87. And then where did the 80 target? Because I was thinking it was going to go toward a 786 as a deep retracement, and that's the 80. That's where that original target came from. So that's how we always come up with these numbers. I don't just randomly pick them. They're based on Fibonacci's, prior price action, etc. Are we going to get down to these lows? It's until price proves otherwise, yeah. But that's why I keep going back to this bigger picture, stating that this is a wave 2 correction, and at some point, it is going to reverse, right? Is it now? Just like I said over here, I said, nope. Based on that beautiful 3-wave correction, we broke back lower. We got a new swing point low. That's all you theoretically need. At some point, when you get a new swing point low and then you start seeing a move, and then you get a correction to a higher low and you start breaking out and the trend continues, that was from that low. So are we going to see it over here at some point? Yeah, whether it's here, which is very unlikely, a little bit lower, a little bit lower. But again, once we start taking out that 94 area, which is the swing point low from COVID up to the high, that's 786, that brings in the 85.82, which again, on the charting platform, that's where these numbers come in, right? 85.82, if we break that 786, which is this 94 area, from the COVID low to the high, that really sets the tone. Not only do we break the 618, you break the 786, and it's pretty much over. Highest of highest probability, 75%, we're going to go to 85. And again, we get 85, 82 area, anywhere in the vicinity. We're awfully close to what we diagnosed and mentioned 3+ years ago, right? So why do we spend so much time on the dollar index? Because if you know where the dollar index is headed, you have a very high probability of where a lot of asset classes are headed, not limited to, but certainly Forex, and that is the euro dollar. Euro dollar, we talked about numerous times, way back when we were below parity. We talked about, man, you need to go long here because it's going to go thousands of pips, and we're looking for a lower high, lower low eventually. That's the plan. But how and where does that lower high end? I still think we should break this prior high and make a lower high off of the bigger time frame, the all-time high up here at 160, high to low. That's the big picture. And we're looking for somewhere between a 618, 786 type of retracement. That's what we were looking for. Everything to this bottom, we're looking for that type of move. That's why I said at this point, we were likely going to get thousands of pips in a retracement. But at no point did we say, well, no, this is the bottom reversal, and we're going to go breaking all-time highs. We're going to go to 170, 178. No, we're going to go potentially to 136 to 146 area. That's the plan. Well, could we end up lower than that? Yes. And make another lower low. That is the A, the B, and the C. So that's why, as we talk about this for many years now, over 3 years, here's been the schedule for this. And this is what we've been looking for in term. Actually, I'll put it on this one with the software and go out to a monthly. This has been the plan for us to get this retracement and then end up switching gears and going back lower. And back when we talked about it, we had a monthly oversold, we had a weekly oversold, we had a daily oversold. Prior to that, way back into the 2000s, 2009-ish with the financial crisis, etc., as we topped out at this 160, I was calling for a move below parity. I had no idea back then it would take 15 years to get down there. Timing is the toughest part, but that goes back in those archives, which are there for your viewing pleasure. Talked about that we're going to go below parity, called for it for the longest. Now that we reach below parity, what are we looking for? We're looking for an A, B, C type of retracement. That is what this is. We're simply looking for this A to go up in a B and come back down in a C. And while we're grinding and grunting, we talked about these moves, making big pips, the latest move here, the big runs, and we've been buying the dips and continuations. And as we look at the most current, that is off of the charting platform, we're still in it and ongoing in a trade looking for the next targets. I have it running on this platform at the moment, and it's still running. We took profit 1 and 2. We're looking for take profit 3 up here, right around that 1950, which we got a little ways to go as we had a pullback since then, but we're still grinding. On a daily chart, we're seeing that we got in that move, and that wasn't the bottom reversal. Remember, this was just one later that I talked about us moving higher toward that 118, 118.50, the 119.50. Those were the targets, and that's why it's still running. We're in a position of authority. If this thing goes plummeting, we're already bank profits, and the stop loss is in profit, so we can't lose anything. With profits in the bank, we just get pipped out for more profit. But the bias is we're going to continue to go higher. That's where this comes from on this chart. So from the recent high to low, we went toward 113, 115. Yep, that was the 102 bottom reversal, 1,000 plus pips higher, reached it. Then most recently, we got a pullback in extension, which we looked for the additional targets. So I'm just going to review that real briefly. Why do we keep getting new target zone? Because we looked for the beautiful three-wave correction we most recently talked about, and we gave you targets of 118.50, 119, and 119.50. So far, we reached 2 of the 3, and we got a little correction, came back to the previous place we broke out from. We're bouncing and holding at this point. So the bias is this will continue to grind higher as the dollar grinds lower. That's still the plan. Pound dollar, same thing. Beautiful move. We got the three-wave correction. We got this big rip higher. We've been looking for our targets. We did reach target 1 and 2. We're still looking for a further target higher. And since this most recent pullback, after this low to that high, we then got a pullback which held the 618,786 zone. So we start looking at a couple of parameters. From the recent high to low, we took out the 618,786 zone. We tested the 786, but we didn't get a candle body to close above there yet. But this one over here, where we took out the 618 area, that kind of tells us we're going to 3880. Still got a 75% chance this thing's going to keep grinding, stair-stepping toward this 3880. We did reach the first target. That was from this prior high to low in the correction. We got our 618,786 zone up here, and we reached the 1448, 1272 extension. See the big line right there? Hit that target zone. That was target number 1. Target 2 is 3880. Target 3 is 3960. So the software is still running on the pound as well. We reached out take profit 1 at 250. We got a pullback since then. Yeah, it's a nice pullback, but that's just typical. We're in a position of authority. Worst thing can happen. This thing can go pip us out for more profit, but we already banked it. Well, I still think this baby's going to keep grinding toward these targets. They're sitting there at that 3880 and 3960. And where do those come from? That's what's on the chart. From the high to the low, closing above this 618, which was right there. Got my pointer on it. I use the big red cursor. That 618, we got a candle body that closed above. And that said, we got a 75% chance we're going to go to 3880. Got it? So as we grinded up here and had a pullback, that's typical. From that recent high to low, when you get to your 1448, 1272 targets, a lot of times you do get another pullback before a continuation. That's the plan. So it was no shock we got a nice pullback off of that. That's why I put my take profit one in this zone to get us to a position of authority, even though the plan was to go way up here. Amen? So what's the bias? The dollar should continue to break down. When it makes new lows, the euro and the pound are going to continue to make new highs, and that puts us into our target zone up there. And that is not the end target, we believe. We believe this pound could go up even further, even thousands pip more, up toward that bigger picture. So I'll go back over here on this chart, go to the monthly. And again, we're looking for, if the dollar goes to our 80 target, this pound should go somewhere between that 157 and 170 area. That's the sweet spot we're looking for. And so far, why did we get up to this zone and have a nice little pullback and we're starting to bounce again? We ran into the Magic Fibo. That's why. It's tough. We ran a Magic Fibo way back here, couldn't break it, and we started a continuation of that further downtrend. Well, this is typical. The euro, we already broke the Magic Fibo on a monthly chart. Let me go to this one with the software. And we already broke the Magic Fibo on this one. We broke above, we came back to retest, and we bounced. That was part of these trades right there, going higher. And this is what the pound needs to do. It needs to, hit it, pull back, and the next time break it, come back and retest it, then set up for that extension. Got it? So that's what we're looking for. The pound should go up to reach our targets and start breaking the Magic Fibo. Then I would see probably another little pullback, maybe like this. Go up, break the Magic Fibo, come back and retest it, then bounce off the Magic Fibo and potentially go for this long-term target. What did I say when we were way down here at 1.03, just above parity? I was like, I didn't expect it to get quite that low. And I was like, yeah, that's great. Lower it goes, the higher it's got to go to give us a retracement. But that was thousands of pips already. And we're looking for some more still to come until price proves otherwise. But I did say way back then, back here in 2022, that we were going to see the monthly cycle up and start slingshotting higher in order for us to, and this will just kind of grind up here, for us to get up near those targets. And so far, so good. We kind of cycled toward overbought, turned over, slingshotted higher. Now we're testing the Magic Fibo. So as we start to break down and slingshot higher again, I'm going to look for this to go breaking the Magic Fibo. Then when we try to slingshot higher yet again, we'll probably get the pull back to test the Magic Fibo to then slingshot to go up toward those targets. That's the plan. Till price proves otherwise, I'm going to keep buying the dips as I did down here 3 years ago, and most recently here, and most recently there, as we keep rinsing and repeating on these pullbacks, turn by turn GPS coordinates of where price is highly likely to go. That's what the MPA software does. And what is the magic behind this? The MPA, everything's AI. Well, PAI, that's the only AI you need to know is the PAI, and that's price AI. And once you get price AI in track with the trend momentum, we call the TMPAI, trend momentum hook and cross pattern. When a PAI hooks and the trend momentum crosses on a monthly, the weekly cycles. When a weekly hook and a cross occurs, the daily cycles. When a daily hooks and crosses, the 4-hour cycles. When a 4-hour hooks and crosses, the 1-hour cycles, et cetera, et cetera. Why is that important? Because we can tell based on how long it takes for a cycle. A monthly like this usually takes about 2 to 5 years. A weekly takes about 2 to 5 months. A daily takes about 2 to 5 days. A 4-hour takes about 2 to 3 days, somewhere like that. So the whole point is you can anticipate where price is going based on the cycles. And for options traders, you kind of know how long my option trade needs to be if I'm using options when we're expecting a certain cycle to occur. And what I do for you during class is give you what I believe the software is going to do, and we call that painting the Picasso. So go back in the archives when it was way down here talking about going long. I drew what the software is going to look like. I even talked about we'd go engage, disengage, finally grind and get turn over to slingshot higher. And we should start grinding toward this target and then turn over to slingshot again, maybe multiple times, like we did over here, getting to that all-time high. We started, don't have a lot of data on this one, but you can see we were slingshotting higher and higher and higher, and we rallied. The euro did the exact same thing. I'll move this, go over to the euro. We did it over here. As the euro went to all-time highs, the software turned over, started slingshotting higher and higher and higher while we just kind of rode out up here. That was the plan for this to get a cycle. I even drew the same thing, engage, disengage. Ultimately, we're going to get a cycle. What is a cycle? When the red, blue, and green cycle from oversold, overbought, it turned over to slingshot higher. We then, on that last slingshot, broke above the Magic Fibo on this one. The pound, we basically did the same. The cycle got us toward the Magic Fibo. We turned over to slingshot, and we're trying to break that on that next monthly slingshot, but the euro did it. On this one, we broke above. So that's what I'm looking for, continuation. Amen? So my target is still outstanding, got 150 pips to go to get there, and that is that 1950 target, and I'm going to continue to let this thing run. That is the plan. So in closing, expect more upside. Keep buying the dips in the euro and the pound because that dollar index is expected to continue to break down as we're looking for this trend line to hold, continue to break to new lows, start focus on 95, 95, 80, 95, 40. And again, if we can break this green line, which is that bigger line, that 786, then it sets the tone for a lot more downside. Prove your intentions. That's what I always call force price to prove its intentions. And there's no reason to believe that wave two is over and we're ready to go breaking the new highs just yet because price hasn't proven that it's going to do it. Amen? All righty, so keep buying the dips on the euro and the pound. Keep selling rallies on the dollar index. We got what we needed. We still got some more outstanding targets to the downside. The euro and the pound, we got what we needed multiple times on those moves, but we still have some outstanding targets still to come, and that's why I'm going to continue to let it run. What about the dollar yen? We talked about that most recently, expecting more chop, and we did get a little bit of a bounce when the dollar bounced from last week. Got a little bit of a bounce, but again, the bias is more downside than this thing going breaking out. Pound yen, still grinding. So at some point, I'm still expecting this pound to break down. Could it take years? Absolutely, it could take years. It's been grinding ever since this low in August of 24. That was that tariff, the tariff trades unwinding. Not the tariff. That was the carry trade unwinding here. And that just went straight down. And ever since then, we've been getting overlapping chopping action. We rallied into this resistance zone. So that is not conducive to breaking out right now. It's more conducive to a what we call echoes. Or that's what Elliott waves are. If you take a stone and throw it into a pond, the ripples that occur from that, those are Fibonacci levels. Petals on a flower, your finger to your knuckle to wrist in there, from the wrist to your elbow, those are Fibonacci numbers. Fibonacci numbers repeat all over the place throughout nature, etc. So this is screaming an echo of another down move. But why? because from this initial low, if this was going to go breaking new high, you typically don't see overlapping, grinding, laboring type of move. And ultimately, during the correction back up, you typically will not stop in this zone, which is the what? 618786 zone, and struggle. We've been in this zone for years struggling. You can see back here in 24, we're in 25, so a year plus since that's happened. And what do we expect? Probably one more push, which will probably get a new swing point low. Now, don't think, well, I should just short the pound yen. It's going to go down 1,000 plus points and it's going to happen in a couple of days. I mean, it does move quickly when it happens, but this thing could take a while. But the plan is, bottom line, we start closing above this 202 area, 202. We start closing above that, not a wick, just because it wicks above there. I want to see the close, candle body, daily, weekly, monthly. Anything closes above on a candle body, then by all means, it flips the script saying, yeah, we're likely going to see 211, 215. But until then, the bias is failing. We're probably going to come back and visit this low. So I'm looking for opportunities as this rallies to sell, get into a position of authority. And once we get there, then we could let it run. But could this take weeks? Definitely. Months? Absolutely. Could we go into 2026 and then some? Absolutely. So force price to prove itself. And right now, this is not screaming we're breaking out. Anything is possible. It's not a guarantee that we're going to break down. It's a higher probability, but it's not a guarantee. So we start closing above 202 area. Again, not a wick. Well, it spiked up to 202 and I went long and then it came way down. That's not right. We want to see a close above where the candle body closes. Then we can start focusing on another breakout to a new high. Otherwise, the bias is that looked very impulsive. This is overlapping, which is screaming it's still corrective. Corrective of what? That prior move down. So we're likely going to get another move down to fix this equation. Then we could talk about maybe looking for some more upside. Amen? So I'm not looking to go long here unless we close above 202. Up and until then, I'm looking for this thing to fizzle manizzle and push lower. Amen? All righty, let's continue. What's the latest and the greatest, man? We just keep grinding. Randy, we went right to the next target, 67.60. We talked about that last week. The markets are just never going to stop. Be careful. You look at a weekly chart on this, and we typically don't see continuations of green weeks, green weeks, green weeks without some sort of red candle in the mix, and especially SPX. We can see it looks like a doji there, but let me zoom in for you. We've had a series of 1, 2, 3. That's a little doji there, but it's still green. 4, 5, 6, 7. This is the 8th candle in a row. Typically, we don't get more than 6 months before we have a red candle. So we're pushing the odds. Could we go 8 this week? 9? 10? The more we push in green candles without getting some red candle correction, the more likely a correction is due. So even though it's punch junk euphoria and we continue to grind higher, we're going on this latest little move here to those extensions. We blew past all of these. Now we're up at the 272, 2618. And the more you keep grinding higher, the more rapidly we go higher, the more aggressive the correction is going to be and the quicker it's going to happen. So the problem with this is the markets can stay solvent and crazy longer than you can, right? The market's got trillions of dollars. And I don't know many of you that have trillions of dollars can hang with the market. So this is why we teach you to get to your position of authority, be there. Highest probability we reach these targets. Well, we did. This is from that bigger correction, and this was the target, 63.65. Remember, I was very bullish on this. Now, three-wave correction, ramping up. We got this crazy move higher, but this also replicates what happened back in 2007, 2008 for the financial crisis. We got this grind higher, all-time highs. We went slightly to an all-time high, and we got this pullback, and it was like, uh-oh. And bam, what happened? A huge 57% decline after doing what? Grinding and grinding. And you come back to this look here, and most recently, we got a pullback for COVID. And then we got the pullback in 2022. And then we had the pullback most recently for the tariff talk. But those look eerily the same. And we could potentially see, Elizabeth, I'm coming to join you, honey. What could it be? There's cracks in the foundation. Right now, there's a bunch of option play on like SPY, et cetera, that are putting 30, $40 million for the S&P to take a 10% dump by December. That's only a few months away. That's a lot of money, millions of dollars that the S&P, which would affect SPX, SPY, however you want to play it, there's SPY, but for it to go dumping 10%. And if you look at the numbers, it roughly would take us from this 66, 6,700 level down about 6,000. That's a nice little drop. Could it happen? You betcha it can. Is it definitely going to happen? I mean, there's a lot of money being bet on it by those big players. It's going to happen. So I'm not trying to warn you. I'm just stating that based on this run, and it went right to our targets. That's the beauty of this, that we pegged them perfectly, but at some point we need a correction. And when SPX starts doing this, and you don't see that many months, weeks in a row. So let me zoom this in for you. We haven't seen that 6, 7, 8 week run in a long time that we're currently in right now. Ever since that red candle, you count them. One, let me get my big cursor over here. 1, 2, 3. We got a doji there, but it's still green. My humble opinion, that still counts. That's 4, 5, 6, 7. We're in the 8th week without a red candle. Even after the big tariff talk low, we got a red candle right away. Then we had 1, 2, 3, 4, a red candle, a couple red candles, and a couple 4 green, a red candle. So we typically don't do more than 6 without a correction. We're pushing 8. Has it happened before? You betcha it's happened before. We had a run down here where we had 1, 2, 3, 4, 5, 6, 7, 8, 9 before we got a little correction. But typically you don't see it. Go back and scan through this. So it's warning you, be careful. Even though this thing could still keep grinding higher, sure. It's also due for a correction. So that's why I keep saying, if you're trading this long, expecting this just to continue forever, it is possible. Let's go out and look at this from this move since that low. Another reason why we need a correction from this low over here, this was the tariff low. This is looking like a 5-way. 1 up, 2 down, 3 up, 4 down, 5. And if one fits the other, then yes, we could still go higher. Look at that move. Let me do it with where's my toolbar? Over here. We can do it with this measurement from this low up to that high to the correction. And we look at this latest correction. This thing could put us up here in the 7,000 range. Equal thing. 1, 2, 3, 4, 5, where 1 equals 5, that's typically happens, doesn't mean it has to, but it typically does. Well, that would allow us to go higher. Well, what if we go even further out? And we look at this from a bigger, higher level overview. Well, that could even push us into maybe 10,000 if we start looking at the bigger moves from where this occurred. This is where we got this low down here. What if that is the 1, 2, 3, 4, 5, and we do the same thing there? That's where the 10,000 comes in. If this is my low up to my first run, that's about right there on that bigger scale, so I can stretch that out for you. And then we take this from this recent correction, that could get us even higher. So be careful that, yes, this could certainly keep grinding higher. I would not just be loading the boat every day thinking this thing's never going to have a correction, because when you start analyzing this, we don't get more than 6 weeks on average before we get a correction. We're on the 8th week now. The more we go, 9th week, 10th week, 11th week, and this keeps grinding, the more likely we could see a bigger correction. And the faster we grind higher like that, and the bigger the candles, the more dramatic the pullback and the volatility would be, even more vicious of that move. So where do we stand? How do we make money today? Looks like we just keep grinding. We're reaching the 67.60. What if we break that? Then we got 68.30 up here. That's your next two targets. We're 67.60 followed by 68.30. What about the NASDAQ? It too is still grinding. We talked about this last week, and we expected it was going to go toward the 23.24. And we reached those, we blew past it, right? After the tariff talk low, those were the two targets. We reached those. And then we got another pullback, and off the most recent high to low pullback, we're already reaching the extension 24.6, 24.7. That was my target. And we reached it. We're at 24.9. So how much more did we go? Well, the next target up here is 25.30. Let me stretch this out so you can see those numbers. If the punch junk euphoria continues, 25.3, 25.6, and that's from what? Recent high to low correction. Next extension, which is getting on the long side, right? 272 up here at 25.3. Typically, we don't just run and continue forever. We need a correction. And the more this grinds higher, the more likely we're due one. So what is my word of the day today and this week? Caution. Even though the Fed cut 25 basis points, he talked about doing it 2 more times by the end of the year. Typically, when they go in a rate cut cycle, there's cracks in the foundation for them to do it. The markets are not the healthiest when we go in rate cuts. There's always a problem. And how do we know that? We look at this graph, DGS2, which is the 2-year maturity rate, and the Fed fund rate, which is this mauve or burgundy line, reddish line right there. It's going to appear down here that they didn't pop it in just yet, but the new Fed fund rate has actually been cut 25 basis points. So it's down here about that 4.1. So eventually this is going to update with this thing showing a pullback like that. They'll show this probably at the end of the month, this coming back down, and then looking for this to ultimately be in this area about that 4.1. Is it going to cut again? That would put us down about 3.8. And then we're going to get the third cut. Well, this blue line has to start breaking down to give us room. If we cut it here at 3.8, we're at 3.5, and we're just kind of holding here, or this blue line starts racing up by the next meeting, then it's unlikely he might cut rate next month. What could that do for the market? Big disappointment, right? Sell off. But why is that important in the big picture? Go out to a weekly. Every time the Fed had to cut rates was because the economy was struggling. Back in the dot-com bubble burst, Fed fund rates started plummeting, the blue line. The Fed had to cut rates. Then we recovered into 2007, and the Fed fund rate started to plummet, and they had to cut rates again. That was the 2007 financial crisis. The real estate bubble burst. What could be the next one? Elizabeth, I'm coming to join you, honey. Commercial real estate, fiat currency failure, World War III. Anything's possible, right? So something's amiss when they start cutting. They're still spending money. Yeah, the tariffs are bringing in hundreds of billions, but when you look at the big picture, I believe I have my, do I have it open? Yeah, right there. This is still a gnarly picture. $37 trillion in debt and still climbing. Still climbing. Ouch. And you start looking at some of these ticks in here, and you look at what the revenue is per what the income is, and it's like, wait a minute, we're having a problem here, Houston. We're still spending more money than we're bringing in. How long can that go? Will it last forever? Can't last forever. That's why assets like Bitcoin, gold, erosion of the dollar continues, where you buy less and less per dollar continues. This has to be dealt with. Many ways to do it. Inflation goes way up. That allows the debt to start coming back down. Doesn't make sense, but that's kind of how it works. So we can have inflation go out of control to help surmise some of this debt. Are we ever going to get it paid off? They got to quit spending. You can't keep spending more than you're making and expect you're going to pay the debt off. So something has to give at some point. Credit card debt is at the highest it's ever been. Trillion and counting. Insane, right? So that per holder, we got hundreds of millions of people, and everybody owes that much in credit card debt, which is still climbing. The market can happen again. A lot of defaults on mortgages. They can't afford to pay their bills. They can't afford to pay credit cards. And eventually it's going to put cracks in the foundation. They're already surfacing. But this can't continue, where we're looking at revenue, we're looking at interest, and the numbers just don't jive, where you're in debt and you're making less than you're spending. It just doesn't fit, right? Look at the spending, 7 trillion. Look at what we're bringing in, 5 trillion. Randy, that is a 2 trillion with a T loss. So how long can you, whether you put it on scales you can relate to, if you're spending 7,000 a month and you're only bringing in 5,000, how long is that going to last? That's why I think the dollar is in for more decline until they start fixing this number where they flip-flop this with this. Be a lot better if we were spending 5 trillion and making 7 trillion. Then eventually we could start to nudge this down. So how else can we do it? Continue to use our resources, sell oil and gas. We have more oil and gas than any country, and most countries combined. We have more oil and gas. Well, one way to pay all this off, if you want to talk Star Wars, they have those big boulders out there that have enough gold, silver, minerals, all the things we need, that we have limited sources now. That's what they said. Well, gold's a finite, silver's finite. Well, there's those asteroids out there that are heavy mineral, and there are these companies out there sending probes up there now, and they're looking at ways to not only send aircraft out there, but bring those goods and down to the countries, and it's worth trillions, hundreds of trillions of dollars. That one asteroid they calculate it's worth more than all the economies combined, then some. I think I forgot the official term, but it's like one followed by 19 zeros. 19 gazillion, trillion, whatever that number is. But that's supposedly what its net worth is of all the minerals. So could it be that we go into space and bring in all those minerals to pay this thing off? Somebody's got to pay it. I digress, but this is not a pretty picture when you're spending 7 trillion and you're only bringing in 5 trillion. Houston, we have a problem. That's why until something gives, flip the numbers, then we can start paying that off. Produce all the oil and gas and sell it so we can help our debt down. Where we bring in trillions of dollars, could potentially start paying that down. Or we go in to get that asteroid and start harvesting all those goods and minerals. That could bring this down. There's ways to get to it. But as long as this continues and they can just ignore it, spend, and don't worry about what you're bringing in, we'll just print more money. You need to diversify your portfolio. That's why I'm big on gold, obviously, continuing its journey to 5,000. And certainly silver is way underperforming, continuing much higher. But that is not good. So, back to what we're discussing. Is this thing likely to keep going? Yeah, I mean, it's like continuing, but be careful. You don't want to just expose yourself to all long when you start breaking down some of the Magnificent Seven. I said this last week. Since COVID, only 11 companies have produced all market gains since COVID, since 2019. 11 companies have produced all market gains. That's not a lot of participation. What happens when those 11 that are contributing all the market gains since 2019 start to show some cracks and they get their big pullback? Prices don't always go straight up. You get those pullbacks. You get those bubble patterns and crashes. Always happens. So, yes, I talked about this, but I'm also thinking, is it possible this could keep going? Yeah, this market could stay crazy longer than you can stay solvent, but just don't expose yourself to, we got to see price action give us reason for a correction, and then we can start talking about where those corrections can occur. And the easiest way to look at that is the Magic Fibos. All these little red dots are potential targets where we can start focusing on. We got a weekly, we got a 3-day, we got a daily, we got a 4-hour, we got a 1-hour, etc. So you go, there's the 3-day, and then you continue the daily is right there. It's kind of over here, but same area. And then you continue the same process. At some point, we're going to get a pullback. Houston, we cannot just go straight up. This is not a rocket ship. It is going to correct. So at some point, it was back here in September, we got to pull back toward the 4-hour and then bounced. So we could maybe come back toward there at 24,000. You do that with ES, and we're talking 6,500. Well, what if we get that 10% correction? Where's that? That's like the 6,000, a little bit below. You do 10% from that move back toward the daily Magic Fibo. What if we get a little bit more than 10%? Then the 3 days sitting here about 57, 58. Well, maybe this thing, as it's sloping upwards, it starts moving in the coming weeks toward that 6,000 mark, and we grind, and then we get that 10% pullback by December that they're betting 30, 40 million dollars for the market to crash 10% by December. Maybe it's visiting this Magic Fibo. But even during the big move, we got a weekly pullback with the tariff talk, bounced off the weekly. It happens. Eventually, we're going to need to come back to visit the Magic Fibo on a weekly. Eventually, we're going to get the visit back on the monthly. And I think this monthly comes in during the next financial crisis. Is it 26? Is it 27? It's eventually going to happen. So we shall see when it does, but that's the plan, that at some point we will come back to visit the Magic Fibo even on the monthly chart. We haven't done that in some time, and I don't have the data here with the amount to show you where that Magic Fibo was. But during dot-com bubble burst, we broke it. During the 2007 financial crisis, we broke it. And we came close during COVID, didn't quite reach it. But that's screaming we're going to come during the next financial crisis. We're 2 for 2. Dot-com bubble, 2007 financial crisis. We definitely broke below and reached it in both cases. If you would extend that out, you would see we would have done it. COVID, we didn't. Close. So the next financial crisis, you can bet your bottom dollar it's going to come visit this monthly. Amen. Got every reason why it should, because every other financial crisis it has. So there you go, Mr. Tucson. Likely going to get a further pullback. Is it now? Is it end of the year? I was looking for this to go up toward that 26,000 area, 25, 26,000. So I'll zoom this back out, go into our target zone up here. And this is ES, so we're talking 6,600. We're already there. So how much more? Can we get to 68? Yeah, I would say so. Can we get to 7? Maybe. Pay me now, pay me later. At some point, this vertical move will need some sort of correction. And not even off the tariff low, we need a good correction. But from the last move, you go out to the monthly, and this is where it really makes me nervous. You come out here, you kind of stretch that out, bring this into perspective. We haven't had a 618 retracement from the low of 2007 financial crisis, and we bottomed in late 2008. We haven't had a 618 retracement off a rally since then. Long overdue. Even COVID here didn't do it. So at some point, we need a 618 retracement. Well, Randy, that puts us with that Magic Fibo and even a little bit lower. So pay me now, pay me later, whether it's the commercial real estate, a fiat currency fails, World War III, I'm just going to call it, they call this the dot-com bubble burst. The financial crisis there was the real estate crisis. Is it commercial real estate? Is it something else? I'm just going to call it, Elizabeth, I'm coming to join you, honey, in honor of Fred G. Sanford, Red Fox. Elizabeth, I'm coming to join you, honey. And it's going to be gnarly. And it's going to take us back to a 618 retracement, because all of these did that and then some, even made a new low on ES on here. NASDAQ didn't quite make a new low during that period, but we all got the 618 retracements. If we went further back in time, we don't have the data here, you would see a 618 retracement, 618 at least retracement. So that's coming into play. That's where this target comes from. So even if we're up at 7,000, can we come in half or more? Yeah, that's kind of the plan. So be careful. In the short term, it's punch junk euphoria. We got the rate cuts that we're looking for. The markets are just insane. AI is propelling this to the stratosphere. But it doesn't take much for this to come down. So what am I trying to tell you? Be careful. This could certainly continue reaching 67.60. I believe we're going to tap that. We came awfully close. The high went to 67.56, missed it by 4 points. So is it likely we're going to go up and tap it? Yeah, I do think so. And right now, that swing point high went to 67.56.50. So again, within 4 points, no reason why we won't tap this thing. And then if we break that, we could go up to 68, start moving towards 69, but at some point we need a correction. Amen? So be in a position of authority. I'm not loading the boat on these. When I start to see price action give me reason for a correction, as we called for many of these corrections, we were spot on. When that happens, then I can do a put spread and make a little money to the downside like an insurance policy. And if it doesn't play out and it just continues to rip, then it's protecting my portfolio. But at some point, mark my word, this thing is going to correct. We never, under any circumstance, always go straight up. We always get corrections, always get corrections, always get corrections, always get corrections. And this has been quite the run, and we're overdue. Amen? We're going to extension upon extension. And yes, this thing could stay crazy even longer. So we could push into the end of the year and then some potentially. But a correction is looming. And I wanted to throw that out there. When they start throwing down 30, 40 million, like it's nickels and dimes on by December, this market correcting 10%. Not to say I'm saying you should definitely throw down all the money you can, because it's definitely going to happen. But again, SPX, go back in its history to a weekly chart. We don't get many weeks in a row. 6 is kind of the average, and we get a correction. Or now we're up to the 8th week. And the more this goes, the more likely we could see that correction come sooner than later, but no later than later. It's due. Okay? Then we'll guide you step by step where we think the correction can go. And then when it gets there, does price look like it's ready to continue higher, or we're in for a much bigger correction? And maybe it's the Elizabeth, I'm coming to join you, honey, starting to surface. Okay? So look at RTY. What might be what we need for this thing to finally bust? It might be we need the Russell. Get all your credit cards maxed out before the big crash. And let credit card debt go to 3 trillion instead of 2 trillion. Let it go up to 3 trillion. Maybe that's the ticket when it goes. But looking at the bigger picture, we might need this thing to get up here in the 2600 area. It's grinding. It's continuing to push. So maybe that's what we need. And where does this come from? You can see from the prior high to the low, that was the tariff talk low, we're grinding toward that 2600. We broke the resistance zone. I was looking for a big move lower. It didn't happen. My insurance policy is going to expire worthless. But if it would have happened, man, it'd been pretty because my portfolio's liking this. But if it would have had that, then that insurance policy would have protected it. So I don't mind these. And I'm going to look to do it again. So what could it be? Maybe ES continues to grind, NASDAQ continues to grind, and we wait for the Russell to get up here toward 26, maybe 2700 zone. The probability that grinds up to that point, we broke the 618, we broke the 786, so that is screaming 75%. We're going to go visit 25, basically 2600, maybe 2700. Maybe that's what it's going to take for this to join forces at all-time highs along with everybody else to then set up the big one. So keep an eye on this. I still think this is going to grind higher. What's interesting about small caps, we're not up that much considering. Where Japan's up about 25% for the year, we're up like 9%. And other countries, 50%. It's like, what? How are their small caps up that much higher than ours? Well, all of those are overachieving, and global liquidity. We always talk about this, looking at the Nikkei. So why do you look at the Nikkei? Well, that's just for global liquidity. It's grinding. It's going to the target zone. I talked about these target zones a long time ago, even with the tariff talk correction. And this was the carry trade unwinding. We talked about going up here for those blow off tops. So the more this continues, and I don't think this is finished yet. I think, and we can get a pullback along the way, but before I think we're finished, I think we're going to go up here 48 to 52, somewhere around that 50,000 is kind of the sweet spot. So do we get this to continue higher, that Russell to continue higher, the ES and the NASDAQ to continue higher? But we look at all of these when everybody's up there. Let's go through all the markets. ES talked about its potential, where the top should be, and that was at 6,600 area. We're already there. NASDAQ talked about that being somewhere between that 25,000 to 26,000. Maybe we even blow past that to 27, but that's getting into the danger zone. Russell, just showing where we're likely to go, that 2,600, 2,700, right? Maybe we need that to come into play before we're done. Dow, it too is in its blow off top range. We're up in the 46. Do we go up toward 50 like the Nikkei? Global liquidity. All getting into their zones where we're looking for a nice top and reversal. Is this it? Do we go a little bit more? We're in the zone. It could happen today, tomorrow, next week, next month, next year, but it's inevitable. We're going to get it. Amen? And what could it be? Like I said, I don't know the reason. Credit real estate, commercial real estate, credit card debt where the banks start cracking. Our Fed's been really good since COVID. Anytime there's any kind of unwind, they just throw it liquidity at it. Let's print more money. Let's bail out that little fire and put it out. Bail another one. I don't know if you watch some of those fire shows, but they have those ghost fires where you think you extinguish the fire and it's still burning underground. Those kindles and whatever sparks are still up underground, and all of a sudden, all these little fires they put out along the way, boom, then it ignites and everything goes up in the flame. Well, that's the Elizabeth, I'm coming to join you, honey. So they've been good about putting out little fires here, little fires there, but the cracks are surfacing. And we cannot continue to spend 7 trillion when we make 5 trillion indefinitely. And the technical picture never goes up in one direction. So we're getting closer and closer, and we got that V-shaped recovery like we saw back in 2007. Got to pull back, even worse because we did it on a weekly chart here where it was a 3-day in the past. In 2007, we made new highs, all-time highs, and then what? Crash. So look out. All of these, even the mighty NASDAQ, the Nikkei, we didn't get those 618 retracements since 2009 low. We got a boom. So when we start looking at that, Russell, we don't see it. Let me zoom this out. We don't have that much data on this one. We don't see, and I don't have that much data on this one. Let me try the IWM. I believe we have it in here. We can do it on that one. Have enough data on that one on the monthly. Bring that in. We don't have a 618 retracement since the 2009. After the financial crisis bottom in 2009, we don't have a 618 retracement. This one came close, but no cigar, and we're due for one. So all of these are screaming at some point, we're going to go back and visit and likely give us a 618 retracement. And depending on where do we go up to 26, 27? Do we go up to that? And this is on Russell would be 26,000, 27,000. Does IWM go up to 260, maybe 270? Then we happen? Well, I'll just keep riding from the low, which is there, to whatever the high is. We can move that line, right? I'll remove this one, but we can move this line and move it up. What if we go to 290? Then we should come back down about 140. We shall see. We'll be here to guide you when it happens and price proves its intention. But I'm looking for an IWM insurance policy when the cracks finally surface and we start getting it. But right now, all roads lead to this thing going up to 258, maybe 270 right now. Because why? From the recent high to low, we took out the 618, we took out the 786. So hint, 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 75% chance we're going up here to 258, 70+% chance we're going to 270. Amen? Could we get a little correction in there? Sure, get a little correction, but this is still a high probability target. And maybe what the crack is waiting for is to get the Russell at all-time highs, to match the NASDAQ, to match the ES, to match the Dow, to match the Nikkei, and they're all in that blow-off top zone for that big one. So rinse and repeat and be careful, but this is screaming we're going to 258, 270. Okay? All right, let's continue. What about black gold Texas T? Come back down to the daily, stretch all this out, get that to where we need to be, and we're bouncing again today. We refuse to break below this swing point. We're below the 2000, right there, May of 23 low that we bounced off of. We broke below that. That's why I called for this new swing point low over here. A new low below what? That 60 and change, about 63. We got a 55 new low. But all this overlapping, chopping lower high trend lines is a problem. And it forced us to come up with the idea we'd get a new swing point low. Well, ever since this action, Randy, this overlapping, chopping action, we got a new low. And since then, we got the same type of move. If you kind of zoom this out just a little bit, and we got the low, then we chopped and grind, then popped. We got the low, chopped and grind, then popped. Then we got a deep retracement, a lower high, deep retracement, a lower high. Then we got yet another retracement, lower high. We got another retracement, lower high. And then we got another retracement, lower high, lower high. On which retracement to a lower high do we finally get the same scenario and we go blasting to a new swing point low? So I'm still thinking sell rallies, be careful, up and until we break this lower high trend line we've had for years now. And then we break this swing point up here at 70 area. Then we can start talking about potentially going higher, but this is screaming we're going lower. Amen? So be careful on rallies. If you're buying this, well, how do I know I could buy something like that it can bounce? Well, that's where the software comes in. We go back over here on black gold Texas T, and we can see why we can potentially see a bounce. We got our daily oversold, engage, disengage. This is saying we're probably going to grind just a little bit more, and then we're going to get another push lower as the daily gets overbought. But be careful, because all this overlapping lower high trend line, we saw what that did since 2023 of May. We popped, same thing I was showing you. We ended up getting a new low. This looks identical to that same price action. So we should end up with another lower low. That is the plan. Once we do it, in my humble opinion, once it happens, I'm very interested in going long, just like we got this new swing point low and it shot way up. What happened when we got in the 50s? A little Middle East action with the oil and gas. They need that oil and gas. They can't have prices down in the 50s, 40s, 30s. Can't survive. So something will blow and blow that up. So if we can get this baby to dip down in here, which I still think is on the cards, that is a beautiful opportunity for this thing to go popping back in the 60s. Those that are drilling for oil, drill baby drill, need prices in the 60s to pay for all that. So if prices come down like this technical picture is screaming, we get anywhere into the low 50s or below 50, that's a beautiful opportunity for a big pop to occur to get us back in the 60s. So that's my plan. Any rally should be sold once we take out 60. We're going down to the low 50s, if not below 50. And any moment I see price at 50 or lower, I'm looking to get a position back long. They can't survive down here, so we're going to see this thing pop back into the 60s. Do we actually get down into the low 50s to below 50? That's the plan. So until price proves otherwise, could this thing reverse here? Well, yeah, it's still holding from the recent swing point low up to the high. It's still holding that 618786 zone. I don't care what you're trading, my friends. Put 618786 on your chart. Ninja Trader, it's available in. Looking for even TSLL. I think Tesla's going to go much higher as we get toward the end of the year. And this TSLL is up big now, but it's going to go more. Remember what we talked about last October? It was going to make a big run. We described that in beautiful detail, and this baby went from below 10 up to 41 and change. And we pegged that. I mean, couldn't have been better timing. Look at come over here to our class archives. And when you're on that archive page, our replays on demand, you use the control F symbol and you can type in TSLL. And back in October of last year, right there, I said expect Tesla to hit 500, consider the TSLL trade. October 24th. That was the day that TSLL was below 10, and then expect Tesla to run toward 500. And by December, that baby reached its targets. What a beauty. Well, I since then talked about it setting up again. And the lower it goes, you want to add more to your position. And sure enough, right after those lows, it went up over 40% in 3 days. Got a nice little pop, banked some profits. But I'm still looking for this to go ripping up toward potentially 45 to 60 by the time it's over, when Tesla goes back to that 600 zone. And we're still just chopping and a grinding, but Tesla is breaking out, right? So I come back to TSLL, come back to Tesla, and it's starting to break out. We broke this zone. I talked about this the other day. When it breaks 360 area, we're going to start pushing toward 450. And so far, let me stretch this up a little bit. So far, Tesla, let me get do I have my data box on here? Yeah, right there. So far, Tesla hit a high of 444. I talked 450, went to 445, 444.98 in Ninja Trader 8. So that's not too shabby. When it broke that 360 range, that was that swing point. I talked about it. And I'm not just saying that, it's in the archives. And it's right there just the other week. Tesla TSL expecting 368 breakout. And we gave you a target of 450, went to 444. Not too shabby. That's where this rinse and repeat extensions come into play. So if we were to put on here, I think I have TSLL on here somewhere, there's Tesla. We went right to some areas we were expecting. And I still think, why do I say, 600? Because from the recent low to high, we took out the 380. We're right at that 4 zone testing now. We didn't get a candle body to close there yet, Mr. Tucson. But what's the writing on the wall? When we start breaking 450, where are we going? 528, 560. What's after that? My 600 target up there, 650. So Tesla gets that pop like we've been looking for. Here's the zone, that 5-ish to maybe 7 area, that big pink box. That's the plan. And we expect this to continue to grind. So any pullback should be an opportunity to buy the dip because the writing's on the wall. We're going up above 5 to 6, maybe 7 is the area we're looking for. And when that happens, what's TSLL going to do again? 2x leverage, it's going to go popping. So even if we get a dull when we don't reach the 45 to 60 range, kind of up here, and we started opportunities to get at $10 range again, like we did back in October, even if we just go back and it's a dud and he only gets to the 30/34 zone, and we get a 618786 retracement. Still a win in my books. We're already doubled since we started buying this down here, and I'm looking for a lot more, right, Emil? What happens when we close above 34? Then the door's ajar to go to my original target up here, 45 to 60. What if Tesla runs to 700? I can't imagine we're not getting up here if Tesla runs to 700. Got it? There you have it. What's another one we're giving you as a big time trade? CONL. When Bitcoin makes that final run, we're kind of grinding now, but CONL, we talked about that months ago, and this baby went down here in April during the tariff pullback and went from $8, $9 all the way to about 60, $70. That's what we do when we get these big opportunities. Now we got a correction. So what's some of the upside targets? When Bitcoin starts to rip to where we think it's going, I think CONL is going to be up here in that 85, 90, maybe $100 range. That could be a potential triple from where we are currently. Well, Bitcoin's got to break out. I'm not going to switch to crypto just yet, but just a quick brief on this. We got the move higher. We got a correction that's holding that 618786 zone. If we break below this, then there's a good chance we're obviously what? Probably come down maybe below 100,000 again. I don't want to particularly see that just yet. I'd like to see this hold and start breaking out, but the target is up here between 150 and 170. And until price proves otherwise, no reason to believe it won't happen. So is this beginning of the rip? I'd like to see it. I'd like to see this thing rip up into maybe 130-ish, somewhere in this zone. Give us another pullback, then a last push into that 150, 170. But when that happens, likelihood, a lot of things are going to go ripping. What does that mean? Well, we have a lot of our plays in here like Mara. It should go ripping much higher, 22, 23, 25. Could it go much higher than that? Yeah. Look back in 2021, way over here. Got to slide this over this way so you can see it good. But back in 2021, the last crypto halving, Mara went parabolic once Bitcoin reached a certain price target where these miners went ballistic. That is my 130 target up here, not for Mara, but for Bitcoin. When it gets above 130,000 and starts moving toward that 150 to 170 target, this thing ought to go parabolic again. So I own hundreds and hundreds of shares of these. I can't tell you what to do, no buy, sell, to hold recommendation, but I have hundreds of shares of these, and we're up big already. We kept talking about buying it at $10 or lower. You could have bought it down here at 350 during the crypto winter low, but after we got the correction into the $10 zone over here, that's when I started talking about it. It's retraced enough to warrant it's a bottom in place, and now you can start nibbling on it, and the target is still much higher. We should see the parabolic move occur when Bitcoin hits 130 and above and starts pushing that 130, 150, 170. This thing ought to go parabolic yet again. And what did it do the last halving? Went down here from pennies all the way up to about 80 bucks. So this is the new low, and we went from dollars to where can we go? We shall see. But when Bitcoin gets to that 150, 170 target, wherever these things are, they go parabolic. I'm going to be selling them like hotcakes by hundreds of shares. But same thing with BTBT. We talked about it doing the same, and it's much lower priced. But when did BTBT go parabolic? When Bitcoin reached that profit margin after the last halving, it went parabolic and went from the single low dollars up to 30 plus. Big move. So I'm still waiting for BTBT to give us a big launch, parabolic type move. Well, we discussed buying it. Could have bought it down here at 50 cents. We discussed it buying around $2 or lower. And we're expecting once we start breaking that little swing point up here around $5, the door is ajar to go much higher. And we could see that parabolic move yet again. So when am I going to sell my hundreds and hundreds of shares of this? When Bitcoin rips from 130 toward 150 and we get that big parabolic move, when it just goes ripping, that's when I'm going to take it out. Amen? Any questions on that? So that's stocks. You can play the crypto market using straight up stocks. Then there's so many ways now with the IBIT ETFs, right? IBIT, eShare right there, iShares, Bitcoin ETF Trust. This is where hedge funds and pension plans are buying Bitcoin and loading up on this. Look at IBIT now, the financials. See if I can find that one screen. 88.45 billion now. It continues to grow, right? Average 30 days, 41 million. Look at it. But this number was nowhere near that when it first came out. And even when it came out, I talked about buying the dip when it pulled back and then look for starting. We got another pullback here into the 20s and we just keep ripping. So when do we sell IBIT? Depends when you got in, but the bias is we're probably going to get into the 100 area at least by the time Bitcoin hits that move. So the plan, let me go back to the price, we're in the 60s. I think it'll get to the 80s, to the hundreds at least, when Bitcoin rips to that 130, moves toward 130 to 150, 170. And when it happens, that's the time to unload on these. And then we'll rinse and repeat looking to buy some more. Depends on what you want to do, right? Any questions on that? So remember, black gold, Texas T, we're looking for more downside. Any rally should be sold or take aggressive profits because I really don't see this breaking out just yet because of that price action. Bitcoin should continue because every halving, you go out to the bigger picture here on a weekly, every 4 years you have a halving, and every 4 years post halving of those 4-year halving, you get a 12 to 18 month run, 12 to 18 month run, 12 to 18 month run. Guess what we're getting into? Our 12 to 18 month run. So when that ends, we'll look for a correction. And then next halving in 2028, we'll look to buy low. Remember what I said in 2022? Bitcoin below 20,000 was a steal. It was a bargain. They came out with the ETFs and everything else you could be trading instead of buying crypto straight up. It's one of the better investments out there. Bitcoin will go, listen to this carefully, $1 million. It's at 100,000. It will go to 1 million. No ifs, no buts, no ands. In my humble opinion, it will be worth $1 million. Why? Because now that it's available on the stock index, and pension plans with trillions with a T can start investing in it, it's going to push the price. And with all this spending and dollar and currencies failing, it's a digital asset and it's going to go to 1 million. So, how can I play that? There are a lot of ETFs and things to start investing in. Yes, at the end of the run, you're going to get a correction, but is it going to be as steep as historically? That has been guaranteed for all four halvings since 2012 over here. We go 12 to 18 month run, we get a massive 70, 80% decline. Then we get the next halving, massive 78% decline. Then a massive run, 70 to 80% decline. I don't think this go around, because of all those ETFs, because of pension plans. Think about it. All of these BlackRock and those that have trillions of dollars in pension plans, they can't afford for their pension plans to lose 70, 80% of value based on that investment. So that's probably going to hinder how much we get Bitcoin to pull back this go. But I will be here to guide you when I think the bottom is in place, just like I did here in November of 2022. And I begged and pleaded, Bitcoin below 20,000 is a steal. You're actually committing a crime if you buy it this low. It's such a good deal. And we'll rinse and repeat next year. Well, 2026, we should get some sort of bottom. And then we'll look to hold it for 3 years into late 2029, 12 to 18 months post halving. That's the cycle. Amen. What about this Ethereum? It pulled back big recently because Bitcoin pulled back, but it's starting to bottom. I'm going to go to a daily chart and bring this in the view. But here you go. We got a pullback. It's holding. And the bias is based on Ethereum. It should still go higher until otherwise proven. And why is that? Remember our rules. In the last crypto winter push, which I got to condense this, is way over here. So let me go to a weekly, make it easier, and I'll stretch it out. But Ethereum is already written in stone as far as the rule is, from the all-time high back in 21 to the crypto winter low into 2022. We broke the 618786, which is screaming Ethereum should go to 5,500, 6,000. And if we get a little feisty, maybe we go to 7. So since we closed above that 33 and 4,000 range, that's screaming we're going to 55, 6,000. And we pull back now to 4,000 area to retest that breakout. But all roads lead to us going at least to this target zone. And what happens when that makes the run? There's a leverage product called ETHU that I own a lot of shares. And yes, it pulled back recently, right, Harold? But this is the same rinse and repeat. You can play crypto using stocks, ETFs, without worrying about, well, if I buy this, where do I buy it? I got to go to a crypto broker and I got to lock it in a wallet and do this, and it's confusing. I don't want to deal with it. Well, there's ways to play it without all that. Got it? And Harold, remember when this was down here and I talked about it? Well, first off, before they had the splitsy down here, when it dipped in the $4 range, it went up to $12. That was a triple. Took those profits from the market, bought this next decline. Even after splitsy, it made the prices go way up. But the point is, this talked about at least going to that 160, 200 zone when Ethereum made a run from its low up to 4,000, did exactly that. Now Ethereum's expected to go to where? 55 to 6,000, maybe 7. Where should this go? I'm thinking it's going to go back into the 250 to 300-ish range. That's still a double potentially sitting out there. Got it? So I haven't sold these. When it went from 4 to 12, I took profits, used that money to buy more. So I'm on the house's money. And now I'm up big in profit already, and I'm looking for more. Got it? And they get a little pullback, it rips, a little pullback, it rips. Maybe this is the 1, 2, 3, 4, and we get that last push into the end of the year. When Bitcoin hits 150 to 170 or higher, that's when I'm going to unload all this. When Ethereum gets to that 5,000, 6,000, or even 7,000, kind of as Bitcoin rips and Ethereum rips together, when they get up to those nosebleed sections, this thing ought to be in the 250 to 300 range. Now, again, I can't tell you what to do. But if you were listening back then, had an opportunity, all I did as a disclaimer, I said, that's what I'm doing. I even talked about setting junk bids down at $4 or lower before the split made this price much different, and it did a perfect triple. Now we talked about buying it again on that pullback and that it would run when Bitcoin, Ethereum here bottomed. And I said, when it runs back to 4,000, it's going to make a ETHU go into the 618786 zone. We start closing above 200, then the door's ajar to go up to 285, 300. See it? So Harold, I'm not done with it. I'm on the market's money. I'm up big in profit, and I'm looking for more. So when do you sell this? When Ethereum starts hitting its targets of 5,000, 6,000, maybe 7,000. I'd like to see hand in hand Bitcoin at 150 or higher, Ethereum at say 6,000 or high, 5,500 or higher, and Ethereum and Bitcoin are up at their target zones together, and it's toward the end of the year, late October, November, maybe December. That's what I'm looking to unload. And then we'll look to do this maybe in 2026. Look to rinse and repeat. ETFs still around by then. When it's time to buy, then we'll look at buying some lows and getting these big moves. Fair enough? All righty. So, what else? Gold. Gold's a juggernaut. It's never going to stop. They keep spending money, they keep printing currency, and eventually, be careful. Gold's doing what our markets are doing. It's just ripping up looks like it's never going to stop. Well, we got a target up here. We're just starting to touch that 3780 area. So at some point, you get the runs, you need a correction. What did I say when we hit this 3,500 before? We needed several hundred-point correction. We got it. I really wanted to see it come a little bit lower, and that was to visit my daily Magic Fibo. We didn't quite get that, right? We came down here, the Magic Fibo. We moved toward it, but we didn't reach it. So this crazy run, a lot of overlapping chopping, we're in the danger zone. We're reaching extension, blowing the doors. So I'm not trying to tell you, well, you better get out of gold. No, if you're buying long term, keep going. It's going to 5,000. My humble opinion. No ifs, no buts, no ands, no exceptions. But we still need a correction. And that couple of days right there, that wasn't it. So pay me now, pay me later. Could this thing keep going? Yeah, it is. It's going to 5,000, but we need a correction in there. And if this still is the A, the expanded flat B, we're starting to get to extremes. So if it's going to do it, it's likely going to be coming fairly soon. So if you're trading short-term options, like weekly options, I'd be taking profits and be in a position of authority because this thing could get spanked very quickly in another pullback. Amen? All righty. So any questions on gold? Definitely going to 5,000. The question is, do we get a bigger correction in here? I'd like to see at least a correction from this recent run, this parabolic run and breakout. I'd like to see a 618 out of that zone. So you bring this back up to the current high from that recent low breakout. I like to see it maybe come back down towards about 3,500. That would be good. Or if we break that support zone, then we might come back and revisit this low over here. That's even better. Well, Gary, if you wanted to go to 5,000, why would you like to see it come back down here and make a new low? Because we got all this chopping overlapping action, and even with this big spike, still could come down. And if it does, that's a beautiful place to add to your position because it's going to 5 no matter what. Could this possibly just keep going straight to 5? Anything is possible. But even gold after the big runs, where it looks like it's never going to stop, you get the correction, right? Never going to stop, you get the correction. And this one is really extending it beyond belief. Amen? We know the reason why, because the monies, the uncertainties, rate cuts, getting a rate cut cycle, that's when we have a problem, Houston. The market starts crashing and gold goes ripping. So be careful. I'd love to see any type of pullback would be ideal. And from the recent breakout low to the high, maybe a 618 retracement. If that doesn't hold, then back toward the Magic Fibo, back toward these lows. That would be ideal. So all I can say is, Harold, you see gold go tanking and plummeting back to say 32, 33 right here. So actually 35 or lower, 3,500 or lower. That's a beautiful opportunity to add to your position for that 5,000 run. Amen. What about silver? Silver is totally underperforming compared to what gold has done. I'll go to a weekly chart to show you what I'm talking about. From that high to low, we broke out. We hit the 1272, 1618, 272, 26, moving toward this 36 right there. But we took out the 26, right? See it? 37, 33 basically. So we took that out. Look at silver. Way different from that same scenario. We hadn't even broken out yet. So imagine if silver makes a run and catches up with gold and we start pushing the 2618, catching up. That'd be in 111-ish, and we're at 44. So way underperforming. Silver, they use it in everything. Quantum computers, chips, cell phones, TVs, all electronics, you name it. Silver is being used everywhere. Unless they get that, and what is it? The asteroid with all those minerals in it. Silver is a finite amount that's out there until we harvest that big asteroid. Then maybe we'll have abundance of silver and gold and platinum and all these other minerals. But until then, supply and demand says the more the demand, the less the supply. Lower the supply, the more the demand. Price goes skyrocketing. So in my humble opinion, we're going to 60, 70. No ifs, no buts, no ands. But in the short term, this parabolic run needs a correction. But we're definitely going up here. So if you're buying silver for the long haul, keep buying it. Keep adding. Because it's going up to 60, 70, and that's conservative. If it catches up with gold, we're up doubling that into the 100 plus. So big bull candidate for silver. Remember how we talked about silver a long time ago, and we put this trade on long time ago. This thing has been running forever. Took profit 1, 2, we're still extreme. I even moved my stop loss off the chart up here to 61.99. Why? Because I said it's going 60, 70. So I'll let this thing run even if it takes another year to get up there. I'm just going to let it run. I'm in a position of authority. I moved my stop loss in the profit. You can see the entry was way down here. And then we pushed the stop loss way in the profit. So I waited for this correction because I was looking for a deeper correction before this thing popped. Well, we still need a correction. So after we get the correction I'm looking for, and then we start running toward that 60-70 target, I'll be able to move that thing up much higher once it occurs. Eh? Now we're up at 37. We just locked in 15 bucks. So it's on-screen programming. I'm going to leave it down here for now because I'm looking for that correction. Then when we find it, we can move that toward that low and let that baby go blasting off toward my next target of 60 plus. Amen? All righty. So let's finish up. Come back to the charting platform. So again, I expect silver to go to 60, 70 minimum. Likely going to go much higher than that, but that's my minimum target for now. Any dip should be bought. If we get the correction in the short term I'm looking for, fantastic. The lower it goes, the more you should add to your position and look for this thing to go to the moon. SLV has the writing on the wall already. Looking at the bigger picture, many people trade silver through an ETF. That's my 60-70 target. They just come up across the board. I'll move this over here. You can see it, 60-70. I don't make this stuff up. I don't just randomly select targets, but this is at a 75% chance we go into 60, 70+% chance we go into 70, and that's conservative. Remember the same rule. What if this catches up with gold? And where would that put us? In the hundreds? So you see why my 60-70 target for SLV is very, very, very conservative. So if we get the dip, we get a pullback because we've been parabolic. This thing has been a running. And most recently, silver, it runs, it pulls back, it runs, consolidates, it runs, it pulls back, it runs, it pulls back, it runs. And this latest parabolic move is due for another correction. Got it? And once we get that, Harold, that's a good time to add to your position because this thing is going to 60-70, no ifs, no buts, no ands, and we do need a correction at some point. Amen? So is it possible this thing could just keep ripping to 60-70? Anything is possible. But in the history of silver, it's never done that. It rips, it dips. Go back on a monthly. Let's go back as far as we can see. It does go on these big runs, but you get pullbacks along the way. And this is quite the one as of late. We need a pullback. Got it? But we're going here no matter what. So the more we dip, the more I salivate and add. Keep adding. And what I love about stock trading these days, I can buy 1 share, I can buy 10 shares, 20 shares. There's no commission fees, so it doesn't matter. Before there was so many fees, I wouldn't want to buy 1 share and then 1 share and 1 share, pay a fee, a fee, a fee, a fee, a fee, a fee when I just buy hundreds at the time. Well, now I can buy 1 a day, 2 a day, whatever. No fees. We're going. No ifs, no buts, no ands. Let's finish up. Continue with that last conversation. This is screaming. Come back to this weekly chart. And we got the pullback we needed from the last crypto winter low up to the crypto winter high pullback into 2022. And all you see is lines up here. But that's where this comes in and why we believe from that prior crypto high. Let me go to a 3-day, I believe, can get us in here and stretch that out so we can see it a little bit better. Right there. And where the targets are, that was the last crypto winter high, the new crypto winter low going into the halving this April of 2024. We're pushing into our 12 to 18 months post halving. We're not there yet. So targets on the wall, 55, 6,000, maybe 7,000. And when it rips, ETHU is going to rip with it. You look at the futures price because Bitcoin has multiple different brokers, Ethereum has different brokers, but the futures version is regulated by the CME. So that looks for 55, 6,000. Even the future, same thing. Why do we think we're going there? From the high to the low, took out the 618786 zone, which is up here. We took that out, so writing's on the wall to go there. Amen. So again, when Bitcoin hits 150 to 170, Ethereum starts hitting that 55 to 6 or higher. That's a perfect time to sell ETHU, which again, in my humble opinion, is going to be up here in that 250 or higher. And whenever that happens, whether I'm at 200, 250, 300, 390, I don't care where we are. When that occurs, I'm going to sell and bank it all and then look for the next opportunity to buy low and sell high. All righty. So I wanted to finish this up looking at a couple of things. We looked at Tesla real briefly, looking at the Mag 7s. And this is breaking out. So a little bit of a pullback, next run. I talked about reaching 450. You would probably find resistance there. It went to 444 or whatever I told you a minute ago, 444, basically 445. That's close enough to that 450. Do I think we're getting a massive pullback? No. Maybe a little pullback to the next push. But where do I think Tesla's going to be at the end of the year? Up here in that 5, 6, maybe 700 range is the target. We get the blow off tops, which we're working on all the markets by year end. We're going to get the other markets combined, and Tesla is no exception, should be pushing the mags. We got a few of those. Apple looks like it's starting to break out. I'm more bearish than bullish, but this is screaming we're likely going up to that 260, 270. We're breaking out. We broke the resistance zone, so it's likely going to push toward that 260, 270 zone, overlapping from the previous one over here, 256, 274. We're getting into that zone, so Apple probably go a little higher. But then what? Elizabeth, I'm coming to join you, honey. We shall see. But remember, 11 companies have, since 2019, given all the market gains. That's not big participation. And there are a lot of issues coming that are starting to surface. And as I started the conversation in the markets, Harold, there are big players right now on SPY, SPX, etc., that are buying 30, 40 million, or probably even add more, for this thing to plummet 10% by December. That's only a couple of more months. We're almost in October, so we got a little over 2 months for that to pay out. So they keep throwing money at it, millions and millions of dollars. This thing is due. And we talked about SPY, SPX in this case, on a weekly chart. We don't typically have green candles on average, but about 6 weeks, and then we get a pullback. Well, look at me now. We're into our 8th candle this week. Could this thing end up red? Sure. We typically don't run more than about 6 weeks before correction, and we're on the 8th week. Since that little pullback right there, that red candle, look at the green candles when you zoom this in. Even with the doji, I was talking about that earlier. I'm just reiterating, circling the wagons, that we got 1, 2, 3. Doji is green, 4, 5, 6, 7. This is the 8th week. So pay me now, pay me later, we're due for a correction. So yet we grinded up toward that 66.98. We got a high of 66.99. We reached that extension. Could that be the end if we get a correction? Sure. That's why I wanted you to be in a position of authority on the run. And we gave you these targets the other week, even on the bigger scale. We gave you the 63, then the 65. Now these latest ones off of that little pullback, rinse and repeat, get a correction. We look for price action to warrant, is this a bottom for another push? I'm not convinced this is all-time highs and that's the end of the road, but we certainly need a correction off of that. And I still think we're going to get a bigger blow off top by year end. That's kind of the plan. Amen. So what's it going to take? Well, look at them. This was, we'll do ES because I love futures. I trade futures all the time. Futures is up here, and we're pushing the envelope to that 67.60. I said we would reach it, and we got to a high of 67.5675. So we missed it by 3.25 points. Are we going to get there? Probably, right? But we still need a correction. So be careful. Amen. Then what? Get a correction. We get the blow off top into the end of the year. When should that happen? Well, NASDAQ is pushing in our target zone. ES is in our zone. We already talked about 6,600 and higher. Dow is already in the target zone. And Nikkei is in the target zone. All of these in the target zone. So what are we waiting for? Probably the Russell. And right now, Russell is screaming, we got to go to 2,600, maybe 2,700. 2590/2690. So that's at 2,600, 2,700. And maybe this thing grunts and grinds, get a little pullback. Then we all get the end of the year blow off where this baby grinds up to these target zone and everybody else is up there. Then we get that big one into 2026. So stay tuned. That may be what we're waiting for to finally end the blow off top scenario where all of us are in it together. ES, NASDAQ, Russell, Dow, Nikkei. Put them all in the barrel together. Then we get the big one, but I still think there's more blow off still to come, more all-time highs. But I would not be surprised, especially with this scenario on a weekly, 8 green candles in a row. Could it go to 9? Could it go to 10? Sure, anything's possible. But the more it goes, the more we need some red candles in here for a correction. Amen? All righty. So I'll be here to guide you. Step-by-step operation of guiding you when the corrections occur, but I can give you the answers already. On every chart with the Magic Fibo, which is a part of the MPA PE5 software, even if you're using NinjaTrader, the Magic Fibo is a part of that software. So when the corrections do occur, and it's the next market correction, Elizabeth, I'm coming to join you, you have these on every chart, and you start putting areas. So I already have it done on these where I mark them, and I say, where's the weekly Magic Fibo? It's down here. Then where's the 3-day or the weekly? Right? Kind of mark these with boxes or circles. And on this one, I did it on ES already. But these circles represent the different, there's the 3-day, here's the weekly down here. These are potential targets when we start talking, oh, the market's going to correct. Where do we go? We always seem to seek out one of these Magic Fibos. It just happened. Look what the tariff talk did. What did the dot-com bubble burst do? If I can go back, well, I probably can go back that far in here. Let's see. But when actually we don't have enough data, but you can see I was extending this out. I think we have it on SPX. Do we have enough on SPX? Let's see. Yeah. So look, Harold, here's the Magic Fibo. During every financial crisis, dot-com bubble burst, what did we do? We came to a monthly Magic Fibo. The 2007 financial crisis, we came to monthly Magic Fibo and then some. COVID, we came close to it, but no cigar. We didn't quite hit it. We came awfully close. And that was the last big financial crisis, if you will, because they shut everything down. The next financial crisis is screaming, we're coming back to the Magic Fibo. So that's why you have to have that on your chart. Mark my words, is it 26? I can't give you a date and time. I can do it when we get price action and it starts warranting it when it's happening. And you look for these rinse and repeat targets like we are on the upside shooting for those targets. But when it happens, you can bet your bottom dollar it's going to visit that monthly Magic Fibo because it's done it every other financial crisis. Got it? How cool is that? So whether I trade SPX, ES, NQ, futures NASDAQ, QQQ, doesn't matter. It's going to come back and visit, right? Russell, and you look at IWM, we have some data in here. We did it here back in COVID, touched this one on a monthly for IWM, but we don't have enough data going back to show you what it did in the dot-com bubble burst. But you can bet your dollar when this day was coming down here, it was touching during the financial crisis here and the dot-com bubble burst, which only got a piece of it there, but it definitely touched it. If we had data going back far enough to print it, it would. So remember that. Any marketplace, even old Nikkei, comes back and visit. We got it here during COVID, and we would have got it back here during the, well, we don't go that far back on that one. How about this one? Do we have enough data? No, we don't have enough data. But that's what I'm looking for. Even this blow off top, when the market crashes, we're going to come visiting the monthly on these charts. Amen? So with that, I'll say good luck, God bless you, may the pips be with you. I'm humbled and honored to be your mentor and instructor. So join us again tomorrow. That's it. That's all.